Hello again and welcome back to London. The last set of US jobs data were an absolute stinker. So what can we expect from Friday's NFP numbers? Well, I've been speaking to David Starkey from Cambridge Global Payments. I'm going to start with a very simple and open question in terms of the US economy. What on earth is going on? Because it seems to be going along so swimmingly and now things aren't as firm for the US economy.
Q1 was certainly a setback for the U.S. economy. Energy prices, harsh winter weather played a factor. The sort of burgeoning recovery that we saw in the end of 2014 was put on hold in 2015. We're seeing early signs of a resumption in terms of economic growth, but still very sensitive to what that trajectory looks like.
Yeah, what is the reason for that slowdown? There's been trade data over the last day or so which indicates actually Q1 is going to be a contraction, not that small uptick which was originally estimated. So what specifically is dragging down the US economy at the moment?
Big factor is inflation. Setback in energy prices, global energy prices has lowered input costs, and that has created deflationary pressures in the United States. That was manifested in lower core inflation and then lower headline inflation numbers all through the back end of Q4 2014 and Q1 of 2015.
Yeah, the inflation game is always interesting, hard to get your head around. You mentioned oil prices, energy prices. Obviously, the US has this shale revolution. Overall, for the US economy, do you think that lower energy costs, lower oil costs are beneficial or detrimental to their economy?
Net, it's beneficial to the economy. American economy is a consumer-based economy. Most of their GDP is generated through consumption, consumer consumption at that. So lower input costs translate into greater real household wealth, numbers which we're seeing reflected in the data, and that will translate into greater economic output and thus inflationary pressures. The setback, you mentioned shale growth. Yes, alternative energy supplies, shale in North America, tar sands in northern Canada. That certainly puts on pause the infrastructure projects that were on hold, but net for the economy, still a positive.
So let's focus specifically on Friday's NFP number. The last set of numbers were particularly bad. What are you expecting this time around?
Last month's number were 126,000 jobs added versus almost 250,000 jobs forecast. That's obviously a setback from expectations, but it's one data point, it's not a trend. Markets will be keen this month to see whether or not a rebound occurs, and if that rebound's strong enough to offset the negative results from last month.
Is there more volatility surrounding these data releases now? Because we're so focused on trying to figure out when the Fed's going to raise rates that every data release is put under even more scrutiny.
Absolutely. With the thought of Fed rate hikes anytime in the next 6 to 9 months, any piece of data that could possibly offer insight into when that future rate hike might occur is going to trigger excessive volatility compared to what we'd seen leading up to it when monetary policy wasn't really in question.
It seems rude of me not to ask you the question of when they're going to raise rates. What's your prediction in terms of the Fed when they're going to raise?
Expectations are that it's going to take 2 quarters of confirming data that the economy's back on track before the Fed can look to increase rates. Given that economic recovery will be tempered by lower energy prices, rate hike unlikely to occur before Q4 of 2015, probably the back end looking at either a December hike, maybe in a good scenario an October rate hike.
We were just discussing before we started the interview about how difficult it is to call the currencies at the moment. There's a lot of volatility, a lot of uncertainty.
Yeah.
When we look at the US dollar against the euro, which has Greece and many difficulties, we look at it against the pound, which has the election uncertainty. How do you think the dollar stacks up?
A lot less uncertainty in the United States. They face the inflation and energy-related uncertainty, but that comes from a global perspective. The UK faces that as well as the election on top of it. The Eurozone faces the deflationary pressures, but it also faces the sovereignty issue with Greece and with other peripheral countries. And then on top of that, they have their own soft growth factors. Now, I think that the result is the United States continues to maintain its status as a safe haven for investments, and that's going to attract investments as we go into 2016. That's going to be positive for the US dollar.
Well, thanks to David. Friday's numbers are sure to move the market, so make sure you trade safely. But from London, goodbye for now.